Hey, good morning.
How are you?
Not bad.
Happy Gap Down Friday.
Happy gap down Friday. So there's lots of questions about gaps, and I guess we could start there as we're getting ready for the equities to open here.
I know how we can avoid them.
We could avoid them by not sending out tweets.
We can take a phone away from somebody.
Good heavens!
It's like a kid. It's like it's like my kids. Okay, no. I used to tell the kids when they were younger, right? Hey, Facebook and Google, don't forget. Okay.
Yeah, yeah, yeah. It is a fascinating thing, and the dynamic that we're seeing, gang, is that so. Products that are optionable. So if you can sell options against them, you can actually generate an expected range for a product that has about a 70% probability of staying within inside that range. You use Black-Scholes formula. You can use current option pricing to get a sense for that. Well, what ends up happening is typically you will find auctions moving about 25% of that expected range overnight, and then the rest of that takes place during the RTH session. What we're seeing is, like in crude's expecting about $1.50 in range. We've done that in the Globex range. We've already already hit that expected move, and so it just makes for muted and difficult real-time sessions. So it's just something that we have to adapt to. And
we almost did that in the first 30 minutes.
Yeah. I mean, we adapt to it and go from there. But we'll see what the session. So as my platform kind of adapts here and redraws everything.
This may honestly, this just may be a no trade day for me. Just it's Friday. Actually, if this was a little bit of a gap down, I would be looking for a major reversal today. But after yesterday's tweet, this is going to be a tough one today. I think we're going to have to wait the first 60, unless we get a rip and movement here off the open. But it just doesn't seem it's.
Yeah, so we're opening. You can see the different colors here. So this is the overnight trade, and this is the current session that we're in. So you can see the daily bars developing here. We're looking at Nasdaq over here on the right. And then we got ES over here on the left. Bonds, the top. I'm kind of watching bonds because bonds appear to be pricing in a rate cut. People hadn't been talking about a rate cut, and then now all of a sudden they're talking rate cut. And so we're trying to figure out what all of that means. There's a really key level here, the 7150 that we hit overnight. There was 2756 as well in the ES. So we're interested to see how they test and how we behave on those during the session. Same thing we're here with crude, this 54.89. I'm interested to see how that behaves as well. So we always talk about gap rule. So when you have a gapping market on open, and a gap, by the way, guys, is where you are completely outside of, you open outside of completely the prior day's range. So that's directional conviction on the open, and it basically says, hey, be patient. Don't jump around that. And depending on how big the gap is, whether we have any expectation that the thing will close. So we are.
I'm not going to say today's won't close, but man, that would be a wild rally.
That would be a wild rally.
We've seen it before. Again, yeah. The tweet comes out.
Yeah.
And hey, guys, while we're just sort of dribbling along here, go ahead and shoot some questions over if you have them. And we'll go ahead and answer them up this morning here for you. Anything, we're open to anything. As I always say, there's no dumb questions. No questions are out of bounds. This is about learning. Yep. Hey, by the way, what number do you have? I've got a number. I got 53.83 down on the downside of crude if it keeps sliding here today. We're about ready to take out the lows from February here, which was, what number was that? That was 54.30, or just say 54.40. Does that sound right to you? We got February lows coming up here. Looks like they're going to try for them at the 54 or 40 level. By the way, we're $4 down from yesterday's open, so how about that? And then we have an open POC, a weekly open POC at 53.87 down below. That I don't think we'll get that unless this thing just is seriously in trouble.
56. If it was, we're at 54.
October lows I've got at 54. Well, just hang on, my mouse is screwing up. 54.50. I'm sorry. And then we have a open POC below that, which is a weekly POC, which I've got marked here from back from February.
So we're about to hit March lows in crude. 54.90. Well, we're there. We're right there. And then there's a node here at 53.98.
Yep. Perfect. Sorry, I lost you. My coax cable. Lovely. You buy the highest internet possible with the highest speeds possible and guaranteed that it still rolls out every day. Golly. Using profile in general, does it say anything about direction or just about levels? That's a great question, Scott. The question is, when using profile in general, does it say anything about direction or just about levels? I would say that it says both. You know, if you are, it gives you a bias. It doesn't say which direction it's going. Remember, everything's a bias. Okay, so there's 4 questions, you know, in the trading that we talk about in the pathway. You know, where's this market trying to go? Okay, and how good of job are they doing to get there, right? And so that creates a bias for us. So for example, this morning, we wake up with a negative bias at this point. Why? Because look where we are in relationship to all these different high volume nodes and stuff like that. Now does this mean it can't reverse, that it you know, can't reverse? No, that doesn't mean that. But it just means, listen, at this point, the money's probably on the downside today until we get break some levels to the upside. So we don't want to be stepping in front of this and trying to catch it. As you can see, they're still pushing this lower this morning. Now, albeit it's not very much at this point. Maybe we'll chop around today. I don't know. Yeah. But the levels gives us great opportunity to target when we get going in the right direction. And the profile also helps us you know, maintain a bias for which direction we should be. And now it also includes things like delta. We talked about delta this morning in our Slack channel. We talked about what it is pre-market. We'll watch it during the regular trading hours as well. So when that stuff shifts, that gives us a chance to nibble to the other side, which would give us what? Targets that we're looking for above us on that deal. So yeah, I'd say they give us direction. Plus, when we post a sheet every day in our Slack channel that talks about how far we are from the 5-day and the 20-day, okay, which also gives us a directional. But when we get too far away from that, it's like a stretched market, a stretched rubber band. It's going to snap back eventually, right? And so we look for those types of opportunities that help us with direction too. Josh, you want to add anything to
that? I would just say that I'll give you a concrete example, Scott. Okay, so last night we had the 7230. You can see this big composite zone here. So let's talk about what that represents. That represents buyers and sellers. So that's historical buyers and sellers is what that node represents. And that's what we call a level of acceptance. So the auction accepted those prices before. So if you're above that level, then your bias is to the upside, because you're assuming that buyers well, if you're below that level, your bias is to the downside. And unless we would retrace back through that, you're still kind of in the land of the sellers. So the auction, goes back and forth between these levels. So, what the 7150 represents is it represents a area of acceptance from, quite some time ago that we're now coming back into. And so what we're looking to see is, okay, this is a place where the auction should pause. Well, it did that overnight. It's pausing here again, so far in the RTH, and we'll see, do the buyers and sellers that were here, who becomes active? If the buyers become active, that could take us back up to a fight with the sellers that are more recent around the 7230 area. So that, it's as I'm heading from one to the next, I'm kind of leaning on who was driving us away from. That's what's, is the bias. And then when I get to that level, which is what we call those decision zones, then I'm starting to go, okay, well then how do we behave once we get there? So it's a good question. Really good question.
Yeah, we haven't seen that one. So yeah, and guys, like I said, if you have just jumped in, while we're just dribbling along this morning talking about the morning markets, go ahead and just drop questions in. We'll be glad to answer them. Never seen a stupid question yet. Some of them make me really think, actually. Like, okay, that's a good question.
Yeah. So like one of the things I'm watching here is I've got this 54.89 area in crude. We now made new lows, okay, and pushed with some pretty significant selling volume into this level. Now, if this level breaks, then I don't have another level down here till like 54.30, but I'm seeing counter behavior that is, trading through quite a bit of this. If we come back through and make newer highs, that would potentially cut this off, and could set the stage where we start to auction higher, and basically that this level had held. So we're still in the middle of the session, but you can see there's more buying volume in this period than there was selling volume in the prior period. So let's see if they can make it higher high, or what we would say is this is just all this was this was just some profit taking, but nothing to really like keep the auction going. But what's really helpful is you can look at certain levels and say, okay, here's a level I want to make a decision around, and I'll have alerts at these. And so like you can see we're at a decision level for both the Nasdaq and the ES right now. And now I'm kind of watching to see what kind of behavior I get. Like do we just trade back and forth across that over the first hour? Do we cut through it like a hot knife through butter? Like what do we do?
And one thing to understand is that I wish we could be. I wish it could be really black and white in the markets. It'd be so much easier. It's not like, okay, we come back to this node and we immediately hit the sell button. Josh said the optimal word, which is behavior. Do we just slice right through it? Do we pause? We use triggers when we get involved with a trade. We never just take it blindly. We use a trigger, which could be a multitude of things. We have, oh my gosh, I probably have 10 different triggers you could use. It's up to you, of course, whatever you're more comfortable with. And I'll give you an example of a trigger. So let's say we come up to a level, and then you want to make sure that level is going to hold. So after the close of a 5-minute candle, the next candle takes out the lows of that candle. Okay. Now that triggers you, that could trigger you. That's aggressive trigger where you get in at the bottom of that, or you could wait after it pulls back to that level and then defend the highs at that point. Well, what that does is allow you to establish risk on that trade and identify the risk. Of course, you need multiple targets on that trade. In other words, if your risk is 10 points, you're going to need 30 to make that trade worthwhile. Otherwise, you need to pass on it. But there's multiple triggers. So we just don't blindly black and white say, okay, it's this, I'm taking that. Okay, it just doesn't work that way in the markets. Markets are behavioral. We're more behaviorist than we are anything. Let's talk about the basics of trading. There's, I always use my boys as an example because I've taught them how to trade, but there's really 4 different types of trade. One's really not a trade. It shouldn't be in there, but there's 3 different types of situations. Market's either going to go up, down, or sideways. So how do you trade those? Okay, so the way we trade these is either you, on a sideways market, when they break out, you take a breakout trade. Okay, breakdown, breakout, they're momentum trades. Or what we do is we do pullbacks. After the market breaks out, it comes back usually, or stops or pauses. That's considered a pullback or back and fill or whatever. And then we take the trade to go that pullback trade. Or what we do is we do a trend reversal. All right. Trend reversal is simply what I just explained. We come up to a level, we stop, and we reverse. Okay, and we have to get in those trades. Regardless of what trade you take or what methodology you use, okay, the bottom line is that you need to be able to identify risk. Okay, you need to have winners. It's people talk about it ad nauseum, but here's the secret to trading. Your losses have got to be smaller than your winners. It's not about win rate. It has nothing to do with that. I guarantee you, some of you guys out there could win 80% of the time and still lose money. Well, why is that? Because you're taking small profits. You're scared of losing money. So what happens is you take profits at 5 points, but you let that loser go 20 points. Well, you can have a 90% win ratio and you're going to lose money, but you can also have a 30% win ratio and make money. How is that?
Yep.
Well, it works if you do what we just talked about. So the hard thing psychologically, and today I guess we should talk psychology because we are in markets that are, it takes you some, it takes psychology to stay out of these markets right now, is this. You have to trust your setups and execute them, and then you have to push them. Let them go. I mean, there's been some trades in the last, month and a half that if you let it go, there was 150 points in the Nasdaq for you. Well, that can make up for a lot of little small scrapes when you lose, a ton of them. So, and there's other little things that we work on, like position sizing and stuff like that, and scaling up and down on your trades and stuff, which also helps. So yeah, I mean, guys, I mean, I wish it was black and white like that, but it just isn't. It's still a phenomenal marketplace. We love it, of course, but hopefully that helps. Hey, the first 15 minutes is in.
Yeah, and at least we're holding a little bit.
Yeah, we're just not going anywhere. How's the volume so low?
This is the hard part, guys, of when we have these large moves overnight, is it often leads to kind of muted day sessions. Which, basically the trade there is just to play from the edges. Let them settle down, let them kind of get in a rotational sense, and then, we can kind of play the edges off of that. But
so I got a question.
Oh, real quick, Paul, we're waiting for another question here. Just do our introductions proper. So welcome to our Friday Live profiling Q&A. So these exist. I mean, you can ask, any questions that you want to ask about trading, but these exist really to see how we use the profile to help us make trading decisions, and all of the general discussions that people have about trading that this impacts as well. Always want to be mindful of the risk, and we'll talk throughout this whole discussion around how do we define risk. Risk is one of the only things that you have absolute control over. Like, how much am I willing to risk on this trade? As JP said, we are fundamental, or we're not fundamentalists, we're behaviorists. So there are a number of different approaches to markets. There's a technical approach where you're looking at specific price action and trend lines. There's the fundamental approach. If you ever watch CNBC, like watch Fast Money, and these guys will talk about, the valuation of this company, and so they're making making decisions based on, what they see as fundamental strength. And we're not either of those. We're behaviorists. We're really taking what existed on the floors, both on the street, both in Chicago, and that behavior, that auction behavior, and we're just being able to graphically see how that happens. So we're profile essentially is just using a tool to arrange price to help us make those types of behavioral decisions. It's just a little bit about me. I'm Josh Schuler. I'm the founder of Trade with Profile, and the guy who talks too much.
You and me both.
And with me is JP, and together, we are here to help traders build skill and consistency. So if you're not a consistently profitable trader, if you don't come to the market every day with a solid idea, you don't even know how to build an idea, we're a great firm to work with. And our whole process kind of works like this, is that we believe that a consistently profitable trader has mastery around these three dynamic areas. One, that they can see the 4 behaviors observable in every auction and how to observe them. Those 4 behaviors are that there is a beginning, there's a move, there's a test, and there's rest. That's it. The 4 questions to ask before entering a trade and how to answer them. So what's the opportunity? What am I willing to risk for that opportunity? What would tell me that I'm right? What would tell me that I'm wrong? And then the 4 stages of auction competency. So stage 1 is you don't know what you don't know. So it's an unconscious incompetence. And stage 4 is a unconscious competence. Like it makes so much sense that it's instinctive. And the trading development is going along that path. So with this session, I mean, we have some submitted questions. Obviously, you can add questions along the way. We find a trade, we'll take a trade together and see how the rest of the hour goes. And with that, let's get back to
Yeah, full disclosure, I have no trades. I am flat as a pancake right now, and pretty darn happy about it since it's Friday.
Yeah.
This was a tough week. I won't, no doubt about it. It was a tough week of trade because this to be, again, we had gap downs, we had, followed by just muted type of volumes and muted type of rotation. So it was a difficult week. I mean, that's part of the market. Now we're moving into summer. Obviously today is the last trade day of May, so I was hoping for some markups, but I don't think that's going to be happening. At least not yet. We'll see. I don't say it's over yet because it's not. So one thing I wanted to mention with Josh's intro there, behaviorist. Let's talk about that just for a second. So one thing that's for sure in the market, there's behaviors that repeat themselves over and over again. And why is that? Because they're done by humans. And I want you to think about human nature for a minute. Human nature, and I'll give you a little test that you can do at home, a pretty innocent test. The human nature is to do the same thing over and over. They call it a routine, okay? And it's pretty normal, and it's okay, all right? And that's what helps our lives work pretty easily. Otherwise, we'd probably be in chaos most of the time. And the same type of behaviors happen inside the marketplace, okay? The routines happen in the marketplace the same way. We call them pikers, which are gamblers, essentially. They do the same things, and we expect them to do certain things based on what happens inside the marketplace when algorithms do that stuff. And somebody's going to say, well, what about algorithms? Those are computers. Well, remember who those computers are programmed by? People. Okay, and that has not yet changed and probably never will be in my lifetime. At least I hope not. And then those individuals who program computers are pretty simple, even though they're all math heads, PhDs, all that kind of stuff. They still use the same thing: VWAP, 2 standard deviation, 200-day moving average, 50-day moving average. You ever seen an algorithm that gets rolling? Take a look at a 5-minute chart with an 8 EMA. Okay, watch how every time that thing touches that 8 EMA, it triggers another trade. Okay, when I say trade, in the direction that it's going, it is amazing the way it works. So these are still things that they do behaviorally.
Yep.
So as somebody who's a market participant, as yourself is, you sort of got to know what's going on. Okay, those patterns repeat themselves. And if you go back and put a profile on, which you can't go back that far, I don't believe, go back 50, 60 years, and you're going to find the same patterns that are happening inside that marketplace. So why not take advantage of them? So question for you, Q&A. Okay, I'm sorry, I forgot. On behavior, here's your test. If you have a kitchen, which I assume all you do, move the trash can to the other side of the kitchen and see how many times you go right back to where the old trash can is to throw your stuff away. And how long does it take to change that behavior? And then ask yourself, well, is this something that is been repeated over time after time? And what happens next is you typically take the trash can and put it back to where it was before because it's comfortable. Whether it be right or wrong, it's comfortable. So keep that in mind. Try that sometimes. It's frustrating because if my wife changes something and I turn around and throw something in there, I won't even notice it until my wife goes, why are you throwing the trash in there? Oh, because the trash can's been there for the last 10 years. That's why. So, so a question, why do we trade markets? I want to hear somebody's answers. Go ahead and pop them in there. Nobody trades markets here?
Nobody trades markets. Well, while everybody's talking about, I am actually looking at a potential opportunity here in live cattle. I'm intrigued. Here's the opportunity. The opportunity is that yeah. Okay. So the opportunity is that there is some impulsive spots here in the profile from yesterday. We've cleaned up one of those. We made new lows and immediately came back into the prior day's range. We've got positive order flow. So I'm kind of, we had this spike right here, which that could just be a reflective spike, but I'm kind of watching to see if we can hold in here and get some more buying. Then I would basically say, hey, this is my risk. my target's back up here. So, and I'll try to enter somewhere in here. So I'm waiting to see if I can find some more buyers here.
And I, unlike Josh, do not trade the cattle, so I will watch Josh make money.
I'm going to move this over here.
So nobody's going to answer that question. I'm surprised. Nobody knows why you trade the markets. Why do you trade the markets?
Well, I think the question is what's interesting to you about markets? Like what
No,
are you?
I was actually looking for something specific here.
Oh, you're looking for something.
Why do you trade markets? Now, I know I don't want to hear the freedom, but why do you trade markets? And I'll answer, I guess it'll be a rhetorical question, but you trade markets to make money, right? Because money affords you things that you want, right? Whether it be a better lifestyle, whether it be to get out of your work, whether it be to travel, whatever the case may be, right? Am I wrong here, guys? Or I mean, am I the only crazy guy out there in the world wanting to make money?
Yeah, most people trade because they desire to make money.
Yeah. Okay. So Tony, you were with me. Thank you, Tony. I began to think I was on mute there for a second. So the question is, so since we're out to make money, right? Shouldn't we be doing things that other people that are losing money? Shouldn't we be doing different things that people that are losing money aren't doing? I mean, shouldn't we do something different about that? And I say it's not different. It's actually the thing you should be doing. Okay, is watching the behaviors. It's being patient. It's building a plan. It's doing those things. In other words, it's becoming a professional.
Yeah.
I mean, because the markets will take your money pretty darn quick. If you thought you were supposed to be long this morning and you're long right now, you're getting killed this morning, and it sucks. And I know the pain that goes around that stuff, especially on a Friday, because you don't want to take it into a weekend thinking about it all weekend. And I lost money on Friday, blah blah blah. Right. So one thing that we do with our team is we work on that. We work on that stuff to become good and a professional. In the sense of, hey, listen, the competencies that Josh talked about this morning, that you can roll in here and have confidence that you have a plan put together. You're going to follow that plan. You're going to manage your risk, and you're going to put the odds in your favor based on the behaviors. And when you do that, then you start to turn the corner as a trader and start to become what we call consistently profitable. And that I believe that's everybody's goal. And if it's not, I'd like to hear what your goal is. If it's just to watch green and red candles go up and down every day, I can promise you don't need me to do that. So, and I'm talking a lot because the market is it's like watching paint dry right now. We're trying to get a small reversal in crude right now, but I'm not interested in crude until we get back above the open and hold.
Let's see, what is this, 55.16? Just put an alert in here. So what I'm putting an alert here at 55.16, which is the 30-minute high. So I trigger on 5-minute bars, but as a rule of thumb, you always wait for a higher time frame to go in your direction before you trigger on a smaller time frame. Okay, so if I want to trigger on a 5-minute, I want to see us make a new 30-minute high first, or see behavior like this, where here we have some significant volume. We're coming back through the VWAP on the day. So this is playing out about like expected, is that we're going to, this is a rotational day, especially if after the initial balance is finished, this is the first hour's range is the initial balance. Once we're done with that, if we're still tagging VWAP, then, most likely we're going to rotate. And I'll be looking for, I'm looking to be long in crude. If we take out the first hour's high, I'll look for pullbacks to get long towards these levels higher. If we take out this low, I'll look to see if they can get down here, and then I'll probably target back in this direction. So those would be my trades in crude based on how we're behaving so far. And we've already talked about the potential trade here in cattle. Really want to watch them continue to hold this and have positive order flow. That means that they're hitting the offer more than they're hitting the bid, and I want to see them extend this and get up into this, like the 106.60 area. By the way, a dollar move in crude or in cattle is about $400 a contract. So that's the
get on the right side of that market. It's nice.
Yeah. Well, and like where we've come from. So, this is an attempt away from balance. So we've actually been talking with our team this week about balance and excess. So you can see how this market's been in balance for quite some time. These are all daily candles, and here's an attempt away from balance. So when you see an attempt away from balance, you don't know, is it gonna sustain, or is it going to return? So anybody who's active down here from the short side, they need additional sellers to validate this position, or they're wrong and they'll cover. And when they cover, we're going to go back to value. So in the short term, I can use that to my advantage to say, okay, I'm going to look for what we would call responsive longs, basically the idea that they couldn't find enough participation to go lower. And so this is a little bit of profit taking coming back this direction before the next selling leg. And so we'll see what they come up with.
Tony's got a great question on trade management. So trade management these days, how do you assess your context? I'm gonna probably defer this one to Josh. I want to make sure I understand what you mean by that. Your context of when you're in the trade, I'm assuming after you're in the trade, and how you manage that trade. I have a pretty definitive way of doing that. Josh, I'm gonna let you run first on this one.
So I
great question, by the way, Tony. Tony, you always have good questions. Thanks.
Yeah. Okay. Hey, look, hang on a second. Crude's back. So crude has made a higher high in 30 minutes. Less likely that we're going to trend lower now. So although we may see lower prices, seeing some strong buying here in the key decision zone that I'm interested in. Now, this open is really interesting. If we can get back above that, if we can extend that IB high, then in the day time frame, I've got buyers in control that I can lean against, and I can look to establish longs myself. But that's one way that we establish context, is like, in a given day, I want to find out who's in control, and I want to align myself with them. Like that's what I want to do. Especially if you're an intraday trader, you want to find out who's controlling the auction, and you want to be there with them. And a couple different ways that we do that. One, if you want to immediately increase your consistency, wait until the initial balance is done. Like wait until the first hour is complete. 80% of the trading volume will be kind of exercised. It'll give you a sense for what the rest of the day can take place. Are we more likely to trend? Are we more likely to get rotations? Because if we're trending, you're looking for opportunities to either go with the trend. If we're rotating, you're looking for opportunities to play from the edges. You don't really know that until you see what's happened. So, once that initial balance is complete, then we're looking to see where to extend. That kind of confirms or denies or negates who's in control. So with the gap in crude, for example, that's seller control. It's a directionally convicted open. And now I have, a rotating, hang on a second. I have a rotating session taking place here. I don't have any extension. Now, if they take out the IB high extension, I've got a kind of a fight is what I've got going on, because I have, in the daytime, I have buyers in control, but in Globex, I have sellers in control. So there's a little bit of a tussle, which means that we're likely to just rotate back and forth, but that does mean that I can look for opportunities to play on the edges. So I might look for longs, down here, I might look longs here, and look for them to push this way. If I get up in here, I'm more likely to come into these shorts that actually move the market lower and find, reversals back that way. So that helps me kind of ground context. Same thing would be here in the Nasdaq. We've got, or the ES, we've got gaps lower, but if we come back and take out the IB high, unless we negate and close the gap, then sellers still ultimately are in control contextually. And I'm just going to be mindful of that. That means that it doesn't mean that I don't take longs. It just means that I'm going to respect who's in control. So if I'm going to take a counter to control the decision, I'm just going to be mindful of that. And that's what we're often trying to do.
So just a couple things. We have a little bit of excess in that 30-minute on the Nasdaq. We've had twice now down on crude. The first one happened early this morning, I think during the European session, 2:30 in the morning, my time. We had a lot of excess there. They took that excess out. Now we've had excess on a 30-minute in crude. My guess is that we're going to go test this open up here. And then I'll see if they can push it higher from there.
All right, so cattle is kind of in my zone. We're still holding positive delta for the day. I would love to see them trade back above 105, 125 fairly shortly with some good volume, and then I could basically set my stop either at low of the day or below wherever we turn from, and then go long the trade. So let's see if they. What is this? 105, 125.
I'm watching 55 even on crude just to see if they're going to hold that 55. They'll defend it or not. We'll see. And if they defend it, then that's probably a clue there. God, this stuff is slow today. I can't believe this.
Yeah,
I think everybody's spooked at this point.
This is the tough spot of the type of markets that we're in.
Yeah, tough, definitely, no doubt. I mean, and guys, believe me when we say this has been tough because these gap downs. It just the tweet comes out, and then we go from there. So is anybody is anybody from outside the United States with us today? You just put yes or no if anybody is. I'm just sort of curious.
Yeah, and you can use the.
Okay, Tony, where are you at? Oh, Canada. Okay, so you're aware. So the reason I was saying is that we have somebody from way overseas or something. Sometimes we have some people from the Middle East and Australia and stuff. So we have a president that likes to drop tweets quite a bit, and when that happens, that usually makes markets go nuts, and that's what happened last night. So
happened last night. Yeah, I haven't pulled up a peso chart. Good heavens!
Oh, they got hammered last night. It was crazy.
Yeah.
So
how do you pay for? How do you have somebody pay for a wall when you crush their currency?
Yeah, exactly. That works really well. And I just thought about all the people that are just losing millions of dollars out of their portfolios right now because of the market drop, you know?
Yep.
Like, yeah, that's real positive.
Here's the push in cattle here, guys. So I'm getting buyers showing up in here from an order flow standpoint. Now, this is not a very liquid market. This is, I mean, obviously you can see the numbers are much slower than like the Nasdaq or the ES. But these behaviors still work, and if there's a reasonable reason to be active, then it makes sense. So hold this. Come on, hold it for me. Come on, Huey, punch it.
Hell. What the?
Just a little bit more. Hold that just a little bit longer. No, don't tell me. Don't show sellers. See some buyers.
Shit. What the?
Come on. Hold it just a little bit longer. Push. So essentially, you know, they traded lower, pushed higher, come back. If they can hold this and then push higher again, then I'll defend this base right here. But I haven't seen him make another high. And again, first target is up here. Let's see, how wide are we relative to the average here? We've basically hit the average initial balance. Look at the Nasdaq. Positive delta on the RTH session here. So at least for the session, some buyers are defending. Let's see what they get that open. So, you know, my plan here, we can take out the high. That's confirming some buyer presence today. Again, they got to fight with the gap. So I'm not going to just like buy the high. I want to see it, you know, rotate back towards like 71.55 and then get a shorter term trigger and then look for 71.79, potentially get the gap close. Curious, what other products do you all trade? Are these products that you're trading? Are you primarily futures traders, or looking at stocks, intraday traders, swing traders? Any context like that can help us get a sense for where we should take the conversation next. And you can use the chat window or the Q&A, either one. I'm primarily looking for intraday opportunities in the Nasdaq or crude. I tend to more swing the ES. I'm interested in bonds more from a swing perspective, and watching wheat and grains from a swing perspective, and cattle as well. It's not a good day trading vehicle, but not bad for so ES day trader, day swing traders. Okay. This is a question. I often look at the Nasdaq versus the ES, and people ask me, well, why do you talk about the Nasdaq instead of the ES? So a couple reasons. One, I personally find the Nasdaq a little bit more forgiving than the ES. Now some people will go, well, it moves so much. Yeah, but the tick value is lower, so take that into consideration. It does have good liquidity. You know, in terms of the equity futures, there's the ES, then the Nasdaq, then the Dow, and then the Russell. That's in order of who gets what volume. And like if you're trading the mini contract, so we haven't talked about the micros, but if you trade the mini contract, the daily expected range versus the amount of margin you have to put up, you get more return for your capital that you put up in the Nasdaq than you do in the ES. Now, if you're trading with a brokerage that allows you significantly reduced intraday margins, that it's kind of moot because all of them have the same margin requirement. But that also goes into the dimension of making sure that you have skill, because you're trading some significant leverage at that point. When you think about this, when you're trading like one Nasdaq contract, you're essentially trading one contract essentially controls $70,000 worth of the triple Q ETF. So that's a lot of leverage in one contract to be mindful of, that somebody's going to let you put that position on for $500 intraday. That's a big risk scenario, which is why the new micro products are a really great way slow the markets down. So if some of the speed and the width of the markets is too tough for you, a great way to slow them down is to use the micro products. And I think I see Ian on here. So Ian's on here. Ian is with Stage 5, which is a great brokerage. If you guys are looking for a brokerage, it's got good platforms and great tools to analyze your performance, specifically their Stage 5 analyzer. But Ian, what is it? Is it $100 intraday margin for the micros? Like 200 overnight, something like that? Perfect. Yeah. So, absolutely excellent trading tool. Really slows it down. And, if 1 point in the Nasdaq is $20, it's going to take that divided by 10. It's going to make 1 point a $2 move. So if the Nasdaq moves 100 points, where that would be $2,000, it's going to make that $200, which can allow you to absorb a lot of the movement that we're seeing. All right, we're just sitting here waiting. So crude continues to hold this key level. We're almost neutral in the RTH session. So what you're looking at here is you're looking at contract volume, and we're looking at the cumulative order flow. So you can see it's about to go positive. So on my platform, a negative number is positive. So now it just went positive. So it basically means intraday, in terms of who's owning this auction, it's split between buyers and sellers. And again, we have not extended the initial balance yet. Now, in any trading product, there's a 97% probability that you will extend that initial balance every day. So, which way are we going to extend it? We're going to extend it higher, we're going to extend it lower. We don't know yet. Odds are starting to favor that we're going to extend it higher, given the fact that we're holding this key level down here. I think we're going to go test the open, is my guess, JP. It's looking like that.
Yep, they're going to probably get it.
I'm gonna front run this a little bit. And if the CL is too big a product for you, that's the other cool thing is you've got the QM that you can also trade. That's that one. I want the QM here. Go. So here we go. So we got a little bit of a QM trade going on. So here's my entry. So we're looking for a test of the open first here at 55.36. So we'll just let that go.
Anybody got any other questions or anything, or?
Go. Yeah, I like it.
All right, no questions.
I'll ask this question, and then you could just give me an answer. So I'll ask the questions. so the question is, if there, what's an aspect of your trading that you would like to improve? I mean, I'm always thinking about, the next aspect of my trading that I'm looking to improve. And like right now, I mean, it's completely sizing. Like the consistency thing, it's there, but sizing is really the portion of trading that I'm really intrigued by and want to get comfortable with just trading lots and lots of size. Because once you know what you're waiting for on the trade and you can be patient around that, then like you just add a contract, right? And trading is one of those industries where like I can add a contract, and if I was trading a one lot, I can add another contract, and I just doubled my business. If I was trading a one lot and I trade 5 contracts, I just quintupled my business. Okay, what other industry can you do that? What other business can you just immediately change the scale and story? I don't know of one. So, but size also introduces increased risk. So with doing that, you're more patient for the setups that you want. So like this one, like on this crude, I'm really small because I don't have any confirmation yet. I'm front running the trade, so I'm keeping my risk really small. It's kind of like if it works, great, but I don't really see the setup and confirmation that I really want yet to put any size on. If that makes sense. So confirmation, like the thing I'm really waiting for is, when can I see some, extension? Then I'll kind of know what's up. Same thing with cattle. Okay, now cattle is back through the VWAP here. They're probably not going to trigger, so I'm just out on that one. I'm not going to do anything with that, most likely.
Crude's heading to its open. It defended the lows of 54.74, so they pulled back into that level, that 55, 54.90 level. They defended it, and now they're heading back up. They're most likely going to hit the open on that deal. So let's talk about scaling up multiple contracts.
Yeah, how are you going to deal? So Scott, you're asking, how do you deal psychologically increasing size? So a couple things. One is trade logs and performance. Past performance and trade logs are really, really helpful at helping you size up. Because if you know, hey, here's a trade, I know the expectancy on this trade, I know what to look for in this trade, like that can really help you in terms of sizing up.
Yeah, and so the other thing is, you got to own what you trade, and let me explain that. So Scott, which is a really good question. Most people in the marketplace that are looking to do it on a retail basis are onesies, twosies, right? We do see some guys that come in and they've got a bigger account and they're swinging size because they think it's sexy, and then they blow out pretty quickly. It's happens all the time. So, but most people are onesie twosies, so that means they're just gambling. Okay, they're getting paper cuts constantly, and they have no idea what they're winning, if they're winning, what their expectancy is, etc. So you have to own every aspect of that. And what I mean is that whether you're a breakout trader, or you fade the markets, or you're looking for reversals, which we're trying to experience right now on the Nasdaq and also on the crude oil, then you got to understand that trade. You got to understand what makes that trade work. You have to understand why it works, when it works, what's the best conditions for that. So when you see it, you are on it, and there's no question that that's the trade for you. And not only that, do you have controlled risk on it. And when that happens, you get very, very comfortable. You have that conscious competence, as Josh talks about. And then from there, you can add a contract, okay? But not until then. Psychologically, you'll feel the other contract, but you'll be more confident because you understand and you own the process of that trade. And then from there, the 2 contracts becomes very comfortable, and you learn how to scale out of that and manage that trade. Then from there, you can add a 3rd contract and then a 4th contract. But not until you've become comfortable in that situation and you own the trade setup. If you don't own the trade setup, it's going to be extremely uncomfortable, and it's not going to be, you're going to get out of that thing and you're going to go, wow, I'm not sure I want to do that. And I don't blame you. So There's, the notes, the taking the journal, understanding the expectancies, understanding your setup, understanding the win rates of it, and understanding the loss rates of it, understanding what we call your R value, which is, okay, here comes the open here. Sorry, guys. Josh is going to get it here in a couple ticks. So Crude is also getting it here in a couple ticks. So.
Yeah.
But once you do, you become very confident that you can add contracts from there and then start scaling up. And then I'll just give you an extra here. when you are during that process of becoming, really understanding and really controlling that trade and understanding it and owning it, then hold on, sorry. Then you can also look for what we call outliers.
Yeah.
So when the market is ripe for you ever looked at a trade and go, oh gosh, that's a no-brainer. Okay. Well, those are opportunities to add extra contracts as well. Okay. Now, I'm not just saying throw 10 contracts on because that looks like a good opportunity. You can scale into opportunities like that as well. Wait for the confirmation of the move, and then on the pullback add, then on a pullback add, and then, that kind of stuff. So,
yeah. Last other thing I would add to that, just a technique around sizing is, growing an account on one contract, onesies, twosies is hard, right? Because there's not really a chance to get like a runner and get going. So, work around, starting with 2 contracts. So that's another place where the micros can be awesome, right? Because now I can put on a position with a micro contract, and now I can take the advantage of having multiple contracts. You're still slower than a typical Nasdaq, right? But then, how do you add another contract? And I'd say, like, once you can earn enough to cover the margin of the next contract, then you can add another contract. So, in the past, if you're not at a discount brokerage and you're talking about the full Nasdaq contract, which depending on volatility it changes, right? But if it's like the $7,500 margin, well, so once you've made $7,500, then add one, because you'll know that you can grow your account. And so knowing that not every trade's going to work, right? We know not every trade's going to work, although there are better trades than others. But knowing that it's not going to work, if you can consistently grow your account, that can help give you the confidence to, hey, I can add another one, and when I'm in the trade, I'm not looking at my P&L, I'm just looking at the trade itself. Because if you start looking at the P&L when you scale up, it can get kind of freaky. It can mess with you.
Speaking of which, we just hit the open on Crude.
Yeah, I'm out. So, and there you go. So still in Crude here, I'm still looking to see if I'm still interested to see if we can get IB high, get above this 40 area. Then I think we got a chance to get towards 56. There's we spent a lot of time there in Globex last night, so I'll be looking for pullbacks into value to be long, or I may look to see if we exhaust once we get up here, and then I could potentially take a short outside of this range. There's also timing around that. Other thing here on the cattle. So this is a behavior to watch for that can be pretty high probability. So notice in this 5-minute period right here. Okay, so this is now for cattle. This is high volume right here, but this translates to any product. Okay. But it's high volume and they press it lower. Now, that should lead to lower prices. If it doesn't, and they come back through the scene of this before they make lower prices, then that's a way that you can see that you trapped a participant and we're likely to extend in an opposite direction. Okay, so, and then I could basically establish my risk here and be knowing that I just had some sellers that got trapped. So sometimes when you see, really impulsive behavior, watch that. That's also helpful if you're in a trade and you want to trail the trade. Okay, so like let's look at Crude here for an example. So there's strong buying volume and order flow right here. That should all lead to higher prices. So anytime, so yeah, okay, yeah, cattle, Let's go. Let's go, cattle. Do one more tick. One more tick higher. Watch them just explode this thing. So as a general rule, impulsive behavior should lead to further behavior and follow through. When it doesn't, then that's a clue that something's changed in the market and we're likely to explore in another direction. That could be an excellent way to trigger with high confidence. Come on, fats. We got 1 minute to a new 30. And then we'll be landing the plane, wrapping up, and getting ready to go into our weekend. How long did it take? Oh, that's a great question. How long did it take you to reach this level of conscious competency? For me, it took about 6 years.
Too long.
Yeah, and Shayla, that's a great question. What I would tell you is, it didn't have to take that long.
No.
You can significantly reduce your level of competence by having an actual process, and that's one of the things that's hard about markets is where do you go to learn where you're actually going to walk through a systemic process of development. There are very reasonable ways to build skill through deliberate practice, but you have to be knowing that you're practicing things that work, right? So if I'm spending time working on stuff or taking trades and setups that actually don't work, then I'm not going to see performance, and that curve is a lot longer. And JP as well, like we've tried all kinds of stuff that didn't work, and
yeah, it doesn't have to take that long. It took a long time. I didn't have anybody helping me, so I work for firms and stuff, but they don't care about that stuff. They just care that you don't lose your damn money. And so when you go on your own, it's a whole different ballgame. It really is.
Well, talk about this. JP, your boys, like you have two boys that young men that trade.
Mm-hmm.
How long did it take them to gain consistent profitability?
It took them about a year and a half. Now they weren't in front of me. They got school and all kinds of stuff, so there was some it took a little bit more a longer time frame on that deal, but I would say a good year and a half. Okay, and are they conscious competent? No, but what that says is that you don't have to be totally conscious competent to make a profit, and because you're still working with people on this deal. Now, if you're on your own,
argue that so conscious competency is like, I have a plan, and I know that plan works.
Yeah. Okay.
But it's not instinctive yet. And
no, it's not instinctive. There you go. That's the word I'm looking for. I wouldn't say it's totally instinctive for him at this point, but.
I'm long fats at 105.025. I am defending 104.561. So, and then I'm looking for IB extension, new highs up, towards the 106 handle. So we won't stay around long enough for you to see the full trade, but you can kind of follow it. So again, here's my risk, my initial risk, and my target is up here, and I'm right in here for my entry.
So just to finish that question up is about a year and a half. They're still learning instinctually. That takes some time. And just think about driving a car. Driving a car is a little different. If you're in the car every day, you're getting better, quicker, faster, okay? And you instinctively can just get in, turn the car on. You understand it. You're not nervous about being around other people, highway driving, et cetera, et cetera. So when you understand that, then you start to develop the routine, the behavior that we talked about before. When you become that behavior, it becomes more instinctual. Once you become more instinctual, then you become a better trader. You understand that that's not your trade. That's not what you want to do. And that's when the consistency and stuff really starts to solidify itself. So it depends on the person, who you're working with. If you're working with somebody, if you're in front of the screens every day, looking at charts, et cetera, et cetera.
So we have a chance here to take out IB high in the Nasdaq. Let's see if they can do it.
Yeah, they're going to end up doing it.
and then if they do that, you know,
We got to
I've
look
got,
for them to hold.
yeah, we
I
got to
got
look
to
for
see
them.
him get over 7180. That's where I want to see. If we get 7180, I think we get the. I think we gap. I think we close that gap. So
Yeah, yeah, that 7180 is a pinch point. Faux show. Oh, go my little fats.
here it goes. They're going to pop this thing and they're going to run it to 7180 here. Watch this. It's just they can tell by the action they want to do it. The algorithms are pushing it.
I want to squeeze
So.
these suckers.
All right, gang. I got to run. I'm going to land my plane here. Guys, I appreciate everybody being here. Hope you guys got something out of it. If you don't, we'll be back here next Friday. I will be. Josh will be here as well. And then if you want, submit questions prior to that. You can.
Oh, did we lose him? We lost him.
Sorry about that. I lost my connection. I'm having major internet frustrations today again. So anyway, no, we love answering questions. I'll just say that. We love helping you guys. Hopefully you guys got something out of it and stuff. I'm going to run here because I got to boogie out of the house. I have no trades at this point. I'm waiting for something to get above 7180 for me. And then I'll do something then. If not, if it's before 12 noon or after 12 noon Eastern time, my weekend starts. So,
and last thing I would just say is, hey, we do reserve some time every week for one-on-one consults. So if you're still working on your development, not yet part of our community, or want to know what that's about, and even if we're not a fit for you, please let us help you shorten the curve. And we'll set aside 20 minutes to kind of go through what you're doing, what's working, what's not, give you some concrete ideas. And we've got a lot of friends in the industry that we could point you toward, but it's kind of hard to to help you in that until we kind of get a sense for where you are and what's been working, what's not working. So would love to do that. And we'll send that link out with the recording. You can pick a time and we'll have a call, we'll pull up screens, we'll see what you're doing, and go from there. Everybody have a fantastic weekend. Get some rest. These are markets that definitely require rest. And we'll see y'all next week. Peace.
take care, guys.